Non-current assets. What is non-current assets? Fixed assets. And NCL, non-current liabilities is what? Fixed liabilities. Will come in step 3. Very, very clear. CACL in step 1, opposite is NCA, NCL. Both will come in what? Step 3. Non-current, whatever NCL items are there, that will come in step 3. Fixed assets. I have solved the full example, you don't have to worry. Now copy the questions. On top, just put this way, NCH and city, 5 into 2, 10 marks again. NCH and city, 5 into 2, 10 marks. Again, 5 questions. Write down the question. What is the total current assets of the company? What is the total current assets of the company? 120 lakhs, 150 lakhs, 55 lakhs, 75 lakhs, 65, 75. None of the above. Yes. Next. What is the net working capital of the company? What is the net working capital of the company? 35 lakhs, 55 lakhs, 15 lakhs, 20 lakhs, 55 lakhs, 75 lakhs, none of the above. Net working capital. Tell me what is the equation for net working capital? CA minus CL. Those who want, write down in bracket CA minus CL. Net working capital is CA minus CL. Give me another terminology for total current asset. Question 1. What is the total current asset of the company? Current asset, total current asset, what do you write in bracket? Gross working capital. Total current asset, gross working capital. Net working capital, current asset minus current liabilities. 35 lakhs, 55 lakhs, 15 lakhs, 20 lakhs, 55 lakhs, 75 lakhs, none of the above. Next, what is the increase in working capital of the company? What is the increase in working capital of the company? 35 lakhs, minus 20 lakhs, plus 20 lakhs, all of the above. Or none of the above. Whichever way you write, no problem. Done? Say yes, no?
No, sir.
Yes, sir.
Finish it off fast. We are still in the same chapter. Last lecture we started with this. Come on. What is the increase in working capital of the company? Done?
Yes, sir.
Girls, please respond.
Yes, sir.
Thank you. Next, question number 4. What are the funds from operation of the company? FFO. Please write down the short form FFO. What is the FFO of the company? 20 lakhs, 25 lakhs, 35 lakhs, none of the above. Next, what is the total sources of funds or application of funds of the company? What is the total sources of funds or application of funds of the company? What is the total sources of funds or application of funds of the company? 45 lakhs, 40 lakhs, 50 lakhs, none of the above. Yes. Boys, done?
No, sir.
Boys are not responding. Why they are not responding? Done or not?
Sir, can you go back to that table?
What table?
The balance sheet.
Balance sheet. Hurry up now. This should have
Sir,
been
that
last lecture.
outstanding for the current year, it's hidden. You can't see
Huh?
it. The outstanding for the current year, you can't see it.
What is outstanding for the current year? Tell me. Outstanding expenses. Arey, You are a third year
When
student.
you say it out loud, it's not clear. You can't see it.
Outstanding expenses. Outstanding
Expenses.
expenses. Tell me what is the bottom line total? I would like to hear from you.
Total liabilities.
Outstanding liabilities. How much it should be? Outstanding liabilities 8 lakhs and 10 lakhs.
Okay.
It's 10 lakhs and 8 lakhs.
Sir, he's trying to ask the number because you're sharing the
Number,
screen. We
sir.
can't see the number.
Yeah. It's hidden.
It's hidden, the number.
Capital 50-50, no change. What should be the last line? Tell me, you only tell me the last line. Is it here?
150 and 120.
150 and 120. What is that to say?
No, sir, the one line above it.
Outstanding
Something
expenses.
and 7.
Outstanding expenses.
Yeah.
10 lakhs and 7 lakhs. What is the confusion? Just see.
Okay. Sir, you can't
Again,
see it because of that small box.
Okay.
Done.
Okay, done. Okay, now get back to the question now. Get back to the solution now. We will see each and every item. Don't worry. Step 1. Schedule of changes in working capital. While copying, don't simply copy it. You have to be very, very careful. I repeat. Okay, just counter check all the figures. Don't simply copy it. Inventory, see the amount. Okay, first draw the proper format. Particulars, previous year, current year, changes in working capital, increase or decrease. I repeat, don't simply copy it while copying current liabilities. I have given you the hint. While copying current liabilities, don't simply copy. Use your brain. This is the second example you are solving. Current assets, any confusion? Just say yes, no. See the total current asset, 50 and 75. Can you solve it independently? Say yes, no. Okay, total current assets. Total current assets, any confusion? Say yes, no.
No, sir.
Correct. Now current liabilities, be very careful.
So sundry creditors is
Same line, 8 and 10 should come. Okay?
Yes.
There is no item as current liabilities. See the question? There is no item as current liabilities. Very good. Thank you. Your concentration level is good. Okay? Take the question very carefully. There are some students, they want to copy it. They want to enjoy. Simply copy karne ka. Okay. Sundry creditors, 8, 10, difference is 2. Outstanding expenses, 7, 10, difference is 3. Current liabilities, nil. There is no current liability. Cut that current liability. There is no current liability. Okay. Very good. Thank you. Now total current liabilities, perfect it is. I repeat, there is nothing as current liabilities in the question. Okay. Okay. Total current liabilities 15 and 20. Perfect. Say yes, no. Yes. Now
Yes, sir.
50 minus 15.
35.
35 lakhs. 75 minus 20.
55.
55. We started with an opening balance of 35 lakhs, ended with 55 lakhs. I repeat. We started with an opening balance of 35 lakhs, ended with 55 lakhs. Therefore, net increase in working capital is 20. Last lecture you have written the note. When there is increase in working capital, the answers must come in amount column 1 and see the last lecture note. When there is increase in working capital, the answers must appear in amount column 1 and 4. Total 55, 55, 25, 25. Okay, those who are sleeping there, just a reminder, there is nothing as current liabilities. I read out sundry creditors, outstanding expenses, straight away it will come to total current liabilities. Okay, done? Say yes, no?
No, sir, 5 minutes.
Okay, 5 minutes. Okay. Okay, check each and every item. Now I have a question. Outstanding expenses was 8 lakhs became 10 lakhs. Why it is in the decrease column? Why not in the increase column?
So because
I give the
current
hint, you have
liabilities,
written the scenarios.
current liabilities are subtracted, no?
Increase in
Within
current
place.
liabilities
Yes.
leads to decrease in working capital. Very good. Thank you. Increase in current liabilities leads to decrease in working capital. Under current liabilities, which item is not there? Current liabilities is not there. Okay. Done. Boys, done? Say yes, no?
Yes, sir.
Yes?
Yes, sir.
Yes, thank you. Perfect. Any confusion regarding any calculation there? Let me know right now. Nothing. Which item is not there under current liabilities?
Current liabilities.
Thank you. Next, step 2. Calculation of funds from operation, rupees in lakhs. See the question, what is the closing balance or retained earnings given? Current year retained earnings. Don't write the other way. I presume you are thorough with the format. Closing balance or retained earnings 50 lakhs. NCNO, which have been already debited to profit and loss account. Depreciation 5 lakhs, dividend 10 lakhs. Then, I think you remember the format, or ALL. Remember the format? ALL. ALL stands for
Add less.
add less. Thank you. Add less. Add less. See the question carefully. Closing balance or retained earnings 50, depreciation 5, dividend paid 10, 50 plus 15, 65 minus 40, 25. So simple it is. What is the FFO? Funds from operation? Done now. 25 lakhs.
So,
Ah,
in less, they should be already credited to P&L account, right?
which have been Credited to P&L account. Very good. Thank you. Less non-cash and non-operating item which have been already credited to P&L account. Very good. Thank you. Add non-cash and non-operating item which have been debited to P&L account. Thank you. Good. You are thorough with the format. First heading is what? Debited. Second heading is what? Credited. Thereby it is subtracted. Very good. Next, opening balance or retained earnings. $40. Any other change? 50 plus 15? 65. Minus 40, 25. Now, just for discussion, can you get the answer in any other way? This 25 lakhs. I would like to have the, this is for discussion, not for writing.
So net profit.
Net profit, very good, very good. Thank you. You have got the brain. Net profit. How much is the net profit? 10 lakhs. Net profit 10 lakhs. Right? Why do I say 10 lakhs? Dividend paid during the year. See, international hotel, see the top para, international hotel and the net profit to 20 lakhs after charging depreciation of 5 lakhs. Dividend paid during the year is 10 lakhs. Right? Okay. Net profit 20 plus depreciation how much? 5 lakhs. 25 lakhs. I repeat, net profit 20 plus 5, 25 lakhs. What is the other way? Net profit is 20 lakhs. Dividend paid during the year is 10. Therefore, closing balance is only 10. With that 10, you will add back 15. You will come to 25. Whichever way you analyze it, you will come to the same answer, FFO 25 lakhs. Yes. Very good. Thank you. Okay. Now let us come to the next step. Funds flow statement. Come to the funds flow statement now. Funds flow statement. Whatever answers you got in step number 1 and step number 2 should be transferred. See the step number 1. What is the net increase in working capital? Net increase in working capital. Step 1, 20 lakhs. Funds from operation, 25 lakhs. That should be transferred first. I repeat, whatever answers you got in step number 1 and step number 2 must be transferred under funds flow statement. First answer what you got was net increase in working capital, 20 lakhs. FFO, 25 lakhs. Now you have to deal with the fixed asset. Purchase of fixed assets / non-current asset, 10 lakhs. We have already done the marking. Increase in long-term borrowing, 20 lakhs. Since it is increase in long-term borrowing, the business cash balance increased. Purchase of fixed asset. When we have purchase of fixed asset, it is an application of fund. Redemption of debentures. Give me another word for redemption of debentures. Repayment of debentures. Repayment of debentures. Business cash balance reduced. Then dividend paid. When the company pays the dividend, it is an example for what? Non-operating expense. The business cash balance or bank balance will reduce. Business cash balance or bank balance will reduce. Those who are thorough with the format, there is no confusion. See the last item under application of fund. I repeat, all of you refer back to funds flow statement format. Last item, not the total. Before that, on the right hand side, under application, non-operating expense. What is the non-operating expense given in this example? Dividend paid. How much is the dividend paid? 10 lakhs. Any confusion regarding any item here? Tell me. Girls, please respond now.
Let me copy this.
Net increase in working capital. This is what you got in step 1. If you want, write down in bracket. Net increase in working capital, bracket write step 1, 20 lakhs. Perfect. Say yes, no? Yes. Second step, what is the answer you have got? How much? 25 lakhs. Then, see the question we have written, purchase of fixed asset 10 lakhs. Why 85 lakhs became 95 lakhs? Why redemption of debentures? Closing balance is lower than the opening balance. Why increase in long-term borrowings? Closing balance is more than the opening balance. Then the dividend paid 10 lakhs, total 45. Done? Say yes, no? Yes? Done? Why not responding? Boys? Say yes, no?
It's still writing, sir.
Still writing. You are making perfect format, I select time. Good sign. Just counter check the total 20, 10, 35 plus 10, 45, 25, 20, 45. Yes. Yes, done. Say yes, no.
Yes, sir.
Yes. Thank you. Boys? Done. Say yes, no.
Yes, sir.
Yes. Any confusion regarding any item? Right now, tell me. Any confusion regarding any item written here? Tell me. Funds from operation, business cash balance increased. Increase in long-term borrowing, business cash balance increased. Net increase in working capital, business cash balance decreased. Purchase of fixed asset, business cash balance decreased. Redemption of debentures, business cash balance decreased. Dividend paid, business cash balance decreased.
So
Okay.
where
Can
did we
go
find
to
the
next
dividend
topic?
paid?
Sorry?
Where did we find dividend paid?
Dividend paid. Tell me, when you pay the dividend, you are a corporate. You are running a company of your own. When you pay the dividend, what will happen? Your business cash balance or bank balance decreases or increases?
Decreases.
Decreases. Therefore, it is an example for application of fund. Say it is an example for application of fund. Now, cover the confusion. See the format I have given you. See the right hand side.
Sir, I have a doubt. Dividend is not given in the question.
It is given in the question. See the top
Yes.
para.
Oh, okay. I didn't read that. Sorry.
It is given. I am very sure. So paragraph go. Dividend paid during the year. And we have taken this in step 2 also. Underline that dividend paid. How much? 10 lakhs. Underline 10 lakhs. Okay. Since you asked this, write a note. Non-operating expenses, please write down. NOT note. Non-operating items must be recorded in step 2 and step 3. I repeat, non-operating expenses must be recorded in step 2 and step 3. Very good. Thank you for reminding. Non-operating expenses must be recorded in step number 2 and step number 3. Perfect. Who will read out the note? NOT note. I want to hear from you. You do some social service. Read out for others. Say,
So non-operating expenses must be recorded in step number 2 and 3.
Bracket right, dividend paid. For example, dividend paid 10 lakhs. Okay. Now, with your permission, I'm getting into the next step, next topic. No problem? Yes. Next, give the heading capital structure planning, topic number 7. Topic number 7. Capital structure planning. Now, all of you, please stop writing for 1 minute. I would like to have the answer from you. What is the word meaning of structure? STRUCTUR. Structure का मतलब बोलो. I'll give you the hint. First year you have done sales mix. First year and second year you have studied about sales mix percentage. Do you remember the topic? Room sales mix percentage. That is the total sales of your hotel is 1,000. Room sales is 700 lakhs. I repeat, total sales of your hotel is 1,000 lakhs. Room sales is 700 lakhs. What is the room sales mix percentage? 700 lakhs upon 1,000 lakhs into 100. In front office management, you dealt with the room sales mix percentage, F&B mix percentage, and so on. Here, it is not front office management, this is finance. Financial management. Here, you are going to deal with the financing mix. Say financing mix. In front office management, sales mix. Here it is financing mix. What is financing mix? Capital mix. What is capital mix? Capital structure. I think you won't get confused now. In front office management, you dealt with the sales mix. Because you are a front office manager, here you have to deal with what? Financing mix. What is financing mix? Capital mix. What is capital mix? Capital structure. Okay, underline the first 3 words, capital structure or capital mix or financing mix percentage refers to the type of securities. You are a corporate. You will be issuing equity shares. You will be issuing debentures and other securities. And the percentage, if you are getting confused with the percentage or proportionate amount that make up capitalization. Underline the word capitalization and total investment. I repeat, underline the word capitalization and total investment in a business project.
So we haven't written this down.
Sorry?
We haven't written it to underline it.
No, please underline. Okay, that's what I'm telling you. Make up capitalization or total investment. No problem. I'm not hurrying up. Okay, slowly. Capitalization or total investment in a business project. I want everyone to learn the first part right now. In other words, it refers to the composition of long-term sources of funds like retained earnings, common stock, debentures, and preferred stock. Who can give me an example based on this first paragraph? Make your own example and tell me. Girls, just try. You have the brain. Try now. I'll give you the hint. Focus on the last line. How many components are given? 4. Retained earnings? 1. Common stock? 2. 3. Debentures? 4. Preferred stock. Tell yourself you are the GM of a hotel, general manager of a hotel. For you, what do you understand by capital mix? Boys, can you make your own example based on the first para so that in future you will never forget the word capital structure? No, when you are the GM of a hotel, when someone asks you what is the capital mix of your hotel, capital structure of your hotel, you should not be blind. You have to give the answer then and there. Okay, I'll give you an example. Let us say the total investment in your business project, total investment in your hotel project is 1,000 CR. Total investment in your hotel project is 1,000 CR. Your common stock is 500 CR. Common stock 500 CR. What is the common stock percentage? Tell me. I repeat, total investment 1000 CR, common stock is 500 CR. 500 CR upon
50%.
1000 CR into 150%. Let us say debentures is 200 CR. What is the percentage? Say 20%. Right? 200 CR upon 1000 CR. Preferred stock, another 200 CR. 20%. 50 is to 20 is to 20. Now you might have, what about the difference 10? Let's say your retained earnings is 100 CR. Say you are financing a project, you are financing your hotel from how many sources? How many sources? Four. Common stock is how much? 50%. Debentures is how much? 20%. Preferred stock is how much? 20%. Retained earnings is how much? 10%. Very, very clear now. Read again. Capital structure or capital mix or financing mix percentage refers to the type of securities and the proportionate or percentage amount that make up capitalization. What is capitalization? Since you are hearing this word first time, I put another word, total investment. As according to our example, you have taken total investment 1000 CR. Common stock 500 CR, therefore 50%. Debentures 200 CR, 20%. Preferred stock 200 CR, 20%. Retained earnings 100 CR, 10%. I think you understood the logic now. Right? Now you will not forget this word capital structure. I would like to hear from you what are the words for capital structure, other words for capital structure? Capital
Mix.
mix or
Financing mix.
financing mix. How your hotel is being financed. Say how your hotel is being financed. For every 1 rupee of your business asset, 50 paise is common stock, 20 paise is debentures, 20 paise is preferred stock, 10 paise is retained earnings. Very, very clear. Now, what are the practical considerations determining capital structure? Weighted average cost of capital or composite cost of capital. This you have studied earlier. Remember? Refer back the first chapter notes. WACC ka notes देखो. Who will be able to give me the notes regarding WACC? Refer back. We have written the example also. Remember? WACC is equal to weight of equity into cost of equity plus weight of debt into
Proportion of debt.
cost of debt. Weight is nothing, proportion, percentage. Very good. Percentage of equity into cost of equity. What is percentage of equity? Weight of equity. You have written WE and KE. Remember WE into KE plus WD into KD. Refer back the chapter 1 notes. Capital budgeting. Analysis of long-term investment decisions. Okay. Normally the cost of debt is lower than the cost of preferred stock. Very, very clear. Q. I would like to have the answer from you. Why? Why the interest rate is lower than the dividend percentage? I repeat, give me the answer. Why the interest rate is always lower than the dividend percentage?
So
Dividend
because
percentage is
the
not-
proportion of dividend is more than the proportion of debt usually.
Other than that, when there is no profit, do they pay dividend?
No, sir.
No. Therefore, when there is profit, they should pay a higher percentage of dividend.
Alright.
What about interest payments? Even if
They
you
are
are running at a
necessary,
loss,
sir.
you have to pay?
Compulsory payments.
Compulsory you have to pay interest. Very good. Therefore, cost of debt. What is cost of debt? Interest percentage. If you are getting confused, cost of debt bracket right, interest percentage. Interest percentage is lower than the cost of preferred stock. What is cost of preferred stock? Dividend. What is cost of preferred stock and common stock? Dividend. Means interest rate is always lower than the dividend percentage. And thus by employing more amount of debt, the organization can reduce its weighted average cost of capital. I think it is so clear. One sentence you can remember. Can you give me the explanation in a different way? The full sentence. Modify it. Higher the debt, lower the WACC. Right? Higher the debt, lower the WACC. Why? Because interest rate is always lower than dividend percentage. Okay, very good. Okay, come to the next. In addition to cost of capital, what else you will take into account? Flotation cost. In a layman's language, what do you understand by flotation cost? Issue cost. Okay, since you are not familiar with the word issue cost, I have written little explanation. Issue cost denotes the cost of collecting the capital from capital market. For example, your company is going for an equity issue of 1000 CR. I repeat, your corporate is going for a 1000 CR equity issue. To collect 1000 CR from the capital market, how much you are going to spend? 100 CR. I repeat, your corporate is going for an equity issue of 1000 CR. In order to collect 1000 CR, corporate is compelled to spend 100 CR. This is the remaining part. And in the Indian capital market, it is around 8 to 10% of the issue amount. But in the global capital market, it is around 4% of the issue amount. Okay, one word is missing there. In the global capital market, make it market. Global capital market, it is around 4% of the issue amount. Very, very clear it is. Any confusion regarding both this heading? What is the first heading? Tell me. W? ACC stands for girls. Full form for WACC. Weighted average cost of capital. Right? Yes. Then give me another name for flotation cost, issue cost. Done? This is done? Say yes, no? Shall we get into next PPT? Say yes, no.
Yes, sir.
No, sir.
Yes. What is the last line? But in the global capital market, global capital market, it is around 4% of the issue amount. Therefore, whenever possible, you will collect the money. Global capital market rather than domestic capital market. Okay, come to the next heading. Threat of bankruptcy. Self-explanatory. No, you don't want to become Dr. Vijay Mallya, right? See what is given. The corporation should use the debt only when there is enough cash to pay back interest and principal. Otherwise, it may lead to the insolvency of the company. Very, very clear. The corporation should use the debt only when there is enough cash to pay back interest and principal. Otherwise, it might lead to the insolvency of the company. Any confusion is there? Why? Even if you are running at a loss, you have to pay interest. You have to pay the principal back. Means you will be compelled to shut down the business. Okay. Next, financial flexibility. The capital structure of a corporation should be flexible and therefore, please underline convertible debentures and redeemable preference shares. I would like to have the answer from some of you. What do you understand by convertible debentures? Boys, respond. Underline convertible debentures. CD. which can be converted into
Shares.
equity. Say shares. Shares means equity. What is the purpose of converting debentures into equity?
More profits. More return.
If you keep it as debentures, you have to pay.
Compulsory interest.
You have to pay interest, even if you are running at a loss. Once you convert the debentures into equity, if you are running at a loss, do you have to pay dividend?
No, sir.
No. See, you are converting your fixed obligation into variable obligation. Say, we are converting our, I want to hear from the word. We are converting our fixed obligation. What is fixed obligation? Interest payment. Into what? Variable obligation. Why variable obligation? If there is loss, you don't have to pay dividend. I think you understood the logic. Financial flexibility. What are the examples? Convertible debentures and redeemable preference shares. Tell me what do you mean by redeemable preference shares? Redeemable. मतलब बोलो redeemable का मतलब repayable. After you redeem your preference shares, do you have to pay dividend? No. Right? Yes. Next. Form of business organization. Type of business organization. This you are already thorough. Now let's say you are buying the debentures of a company. Do you have the voting right? Say yes, no. You are buying the debentures of a company. Do you have the voting right?
No, sir.
No. See what is given? Debt holders have no voting right. And what about equity? One
Yes.
equity share, one voting right is the principle. Means if you have 1,000 shares, you have 1,000 voting right. One equity share, one voting right is the principle. And therefore, a closely held company, if I say closely held company, you may not understand, therefore I wrote unlisted company. Unlisted company prefers internal. What is internal financing? Retained earnings. What is internal? Tell me what is internal financing? RE. What is RE stands for?
Retained
Who is
earnings.
For RE? Retained earnings. Very good. And what? Debt financing. Why debt financing? They have no voting right. They have no voting right. Say first internal financing, then debt financing, then equity financing. Why first internal financing? You are reinvesting your own profit. Do you have any cost of capital obligation? Do you have any dividend payment obligation when you reinvest your own profit? No. Say first internal financing, then debt financing, then equity financing. If someone asks you, how do you finance a new project? No, you are starting a new hotel in a new location. How do you finance that project? Tell me, what is the sequence? First what? Say, first internal financing, then debt
Equity.
financing, then equity financing. Okay, next. Business risk and operating leverage. Now, some of you are not thorough with the word business risk. Don't get confused. I have put the answer in a simplified version. Higher the instability in sales and profit. This is the meaning of business risk. No, instability ka matlab risk, oscillation, fluctuation, volatility, all means the same. Higher the instability in sales and profit, higher the business risk. Repeat, higher the instability and sales and profit, higher the business risk, and hence they should avoid what financing? They should avoid debt
Debt
financing. They should avoid debt financing. Right? Yes. Okay. Next. Financial risk and financial leverage. It is not clear to you. I want you to complete that sentence there. based on the first para. I repeat, based on this first para. What are the four components? Retained earnings, common stock, debentures, and preference. When you have financial risk, when you have debt, financial risk slash financial leverage slash debt, DBT, right on there, debt. I repeat, financial risk and financial leverage. If you are getting confused, back to what you write, debt or borrowings. Now, financial leverage denotes the percentage of borrowings in the capital structure. Financial leverage denotes the percentage of debt in the capital structure. I repeat, financial leverage or financial risk denotes the percentage of, complete the word, percentage of
Debt.
debt in what? Capital structure. Let's say you are a company, your total investment is 1000 CR, debt is 800 CR. For every 1 rupee of business asset, your borrowing is 80 paise. What does it mean? Financial risk is on the higher side. At any time, your company might become bankrupt because you may not be in a position to pay back the interest and principal. And hence, okay, done. How many points we have completed? What is the first point? Read out the first point, everyone. Everyone, even if there is chorus answer, no problem. First point, bolo. Weighted.
Average cost of
Cost
capital.
of the capital. Second point.
Rotation cost.
Rotation cost. Matlab, what does it mean? Cost of collecting the capital. Cost of
Collecting the capital.
collecting the capital. For example, 1000 CR issue. To collect 1000 CR, you are incurring 100 CR. What is the percentage? 10%. What is the next point? Threat of
Threat of bankruptcy.
bankruptcy. Any confusion is there? The corporation should use the debt only when there is enough cash to pay back interest and principal. Right? Next, financial flexibility. What are the examples there? Two securities are given. One is what? Convertible debentures, CD. And second is what? RP. What is RP? Redeemable preference shares. RPS, redeemable preference shares. CD and RPS are the examples for this. Next is what? Form of business organization. You must go for first internal financing, then debt financing, then equity financing. What do you mean by business risk? If someone asks you, what do you understand by business risk? Instability in
Sales and profit.
sales and profit. Reverse. Let us say you have stability in sales and profit. Then business risk is
Low.
low. Then you will borrow max. Very, very clear.
Sir,
Ah,
so in the seventh point, can you repeat what is after hence?
absolutely no problem. Financial leverage denotes the percentage of debt in the capital structure. What is debt? Borrowings. Repeat. Financial leverage denotes the percentage of debt or borrowings in the capital structure. And you only complete the sentence. And hence what they should do? And hence the corporate with
Increase the debt financing.
corporate should avoid debt financing. Very good.
So it says,
I repeat again.
is that
Financial
okay?
leverage denotes the percentage of debt or borrowings in the capital structure, and hence a company with higher financial risk and a company with a higher financial risk. I only complete the sentence. And a company with a higher financial risk should
avoid debt financing.
Avoid debt financing. Very good. And hence a company with a higher financial risk should avoid debt financing. Same like the previous one here. See the previous point, business risk kya diya? Higher the business risk, and hence they should avoid debt financing. Read again. Business risk. Higher the instability in sales and profit, higher the business risk. If higher the business risk, they should avoid debt financing. Same is the case here. Financial leverage denotes the percentage of debt or borrowings in the capital structure, and hence a company with higher, complete the sentence, higher financial risk should avoid debt financing. Okay, come to the next point. Asset structure. Have you seen this point earlier? Tell me, asset structure. I'll give you the hint. Under working capital, you have written the first sentence. Factors affecting working capital. Someone should tell me what is asset structure. Refer back the working capital notes. Asset structure denotes the percentage of. I want everyone to refer the working capital notes. Factors affecting working capital. Asset structure denotes the ratio between asset structure denotes the ratio between, it may be an MCQ. Asset structure denotes the ratio between.
Current assets and fixed assets.
Very good. Current assets and fixed assets. For a hotel project, what is the fixed asset percentage? 80%. What is the current asset percentage? 20%. I repeat, for a hotel project, FA. How much? FA is? Complete the sentence. FA is how much?
80,
80%. And CA is how much?
20.
20%. Now think this way. When you ask for some borrowing from a financial institution, will you get it? Yes. Why Indian hotels are borrowing so much? See the wording there. Financial institutions prefer to give more debt to a corporation with a higher investment in fixed asset. No, that is capital intensive industry. We must say hotel business is a capital intensive industry. No, if someone asks you what are the special characteristics of hotel business, you must say it is a capital intensive industry. What do you mean by capital intensive? Fixed capital. What is mean by fixed capital? Fixed asset. What is fixed asset percentage? 80%. Since fixed assets are secured against what? The borrowing. Very, very clear. If someone asks you how the hotels are getting so much of debt, the answer is this. Financial institutions prefer to give more debt to a corporation with higher investment in fixed assets. What is the investment in fixed asset? 80%. That is, ours is a capital intensive industry. Okay? And think about the bank who is giving you money. Even if you have to shut down the business for them, no problem. They will sell your land and they will recover the money. I think you understood logic. Even if we shut down the business, they will recover their money by selling our land and building. Next, credit standing of the company. This is very clear. Established corporation with a high credit standing and good track record of profitability should adopt borrowing or leverage principles. Very, very clear now. Any explanations required there? No. Next. Last. Don't worry, I won't complicate it. Last factor, 10th factor. You have to look at the economy, you have to look at the industry. Right? Without that, you cannot take any decision. Characteristics of the industry and economy. The important characteristics of industry and economy to be studied here are cyclical variation. Now tell me, you presume you are, after this hotel management, you are a graduate, you are going to become a bank manager, you are going to become a probationary officer in a bank. When some cyclical company like fertilizer company asks for some money, will you give them? Tell me, will you finance a company which is producing and selling fertilizer? The answer is no, because it is a cyclical company, cyclical variation. But fertilizer company sales and demand will fluctuate according to changes in the climate, changes in the agricultural sector, cyclical variation. What is the next? Degree of competition in the industry, stage in industry life cycle, self-explanatory, tempo of business activity, State of capital market. Now tell me, you are running a company of your own. This is September 2020. Will you issue shares in September 2020 or October 2020? Ask yourself. Say yes, no. Answer is no, because the state of capital market is terrible now. Even if you ask someone to invest, they will not invest because the economy is down, industry is down, right? Okay, next is what?
Yes, sir.
Taxation policy of the government. Taxation policy of the government. Then regulation by the respective regulator, like SEBI. I presume you know the full form for SEBI. What is the full form for SEBI? SEBI stands for
Security Exchange Board of India.
Securities and Exchange Board of India. Thank you. Securities and Exchange Board of India. And policy of financial institutions like IDBI, Industrial Development Bank of India, or ICICI, Industrial Credit and Investment Corporation of India, or IFCI, Industrial Finance Corporation of India. Whichever financial institution you take. Means while you decide about the capital structure of a company, you have to think about all these aspects. What is the last heading? Characteristics of the industry and economy. Right? What is the previous one? Credit standing of the company. Credit standing of the company. Then asset structure. Ratio between fixed assets and current assets. Everyone has faced this? Say yes, no. No more points, only 10 points are there. Okay? Only 10 points are there, nothing there to worry. Who will be able to give me all 10 points? Come on, boys can try. At least heading, only heading I want. Okay, what is the topic name? Name of the topic. Capital
Structure planning.
structure. In a layman's language, what do you tell him? Capital? Say, capital?
Mix.
उसको structure बोलेगा तो he or she will not understand. Still, if the person doesn't understand, what you will say? Financing?
Mix percentage. Mix.
How your hotel is being financed, how your company is being financed. How do you finance your hotel? Through 4 sources. What are the 4 sources? Say, what are the 4 sources? Last sentence.
Retained earnings, common stock, debentures, preferred stock.
Preferred stock. This you must remember. Right? The percentage of these 4 sources are called capital mix percentage. Then determinants or practical considerations. First you will take what? WACC. Why businessmen always prefer to borrow? If someone asks you, all the businessmen are interested in borrowing. Sure. Interest rate is always lower than? Interest rate is always lower than? Dividend percentage. Say, businessmen prefer to borrow because interest rate is always lower than? Dividend percentage. How do you put across the matter? Normally the cost of debt is lower than the cost of preferred stock and common stock. Next is quotation cost, issue cost. Okay, who will read out all the headings? Who will do the social service? Come on. Yes, come on. First point.
Weighted average cost of capital. Of
Another name.
composite cost of capital.
Yes, thank you. Second point.
Flotation cost or issue cost.
Issue cost. Point number 3.
Threat of bankruptcy.
Threat of bankruptcy. Next.
Financial flexibility.
Then,
A form of business organization.
just to emphasize, what is the name of the company given? The closely held company or unlisted company. Please underline that. Closely held. Unlisted company. What is the opposite of closely held? Opposite of closely held company, widely held company. What is the opposite of unlisted company? Listed company. What do you mean by listed? Listed company in the stock exchange. Say, listed company where? In the Bombay Stock Exchange or National Stock Exchange or any other stock exchange. What is the next point? Business risk and operating. Say, business risk and operating leverage. Matlab, instability in. What is business risk? Instability in sales and profit. Right? That is why the word leverage is being used. You are using the leverage. No, leverage means increased means of accomplishing some objective. Here you don't have the leverage because of high instability in sales and profit. Next is what? In addition to business risk, we should take financial risk and financial leverage. Then asset structure. You are thorough with asset structure. This is the second time you are saying. Then credit standing of the company. Next is what? Characteristics of the industry and economy. Okay. I don't want to trouble you. Next lecture, study this and come. We will see the MCQ on this topic. Okay. Everyone has finished this note? Say yes, no?
Yes, sir.
Yes, sir.
Okay. Shall we wind up today? Okay. One more thing. One more thing. You will have an internal test soon. Study the first 3 topics. I repeat, I don't want to conduct the internal test for all the topics together. Topic 1, topic 2, topic 3, you should be thorough from now. Okay? I'll send the message specifically when we will conduct the internal test, but be thorough with the first 3 topics. What is topic 1? Do you remember topic 1? Capital? Topic 1, 2, 3.
Financial management.
No, topic 1. Chapter 1.
Analysis of capital budgeting.
Very good. Topic 2. Topic 2.
Ratio analysis.
Ratio analysis. Topic 3. Topic 3.
Asset management metrics.
No, that is ratio analysis. No.
Oh, sorry.
Common size vertical financial statement.
Yeah. Say.
Common size vertical financial.
Very good. Thank you. Okay. These 3 topics you have to be thorough. Okay. I'll send a message. Okay. In advance. But be ready. I am telling you, you need little time to study all these things, right? Okay, and I want to give you full 25 to 25, be ready. And whatever is being done, you have to be thorough with the theory and numerical, both. Okay? Okay, with that, we'll wind up today. Okay, thank you. I have taken your attendance. Don't worry, we'll wind up now. I repeat, I have already taken your attendance. We'll wind
Thank
up.
you, sir.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.